Financial planning and security can sometimes be seen as a moving target. The rules change constantly, and you need guidance to stay ahead of the market moves. This is the Lebenthal Report with Michael Hartzman and Dominic Tavella, with additional insight from industry veteran Jordan Kimmel. We'll break down the news, trends, and overall direction of the markets, telling you what may be coming next, investment opportunities, and what to avoid. Now, here are your hosts, Dominic Tavella and Michael Hartzman.
And good evening. I am Michael Hartzman, and tonight's broadcast is on Tuesday, July 20th, 2021. And in the spirit of full disclosure, Dominic Tavella and Jordan Kimmel are broadcasting tonight on Monday, July 12th, 2021, because we have a special guest. Jim Rogers will be joining us again this evening from Singapore, where it will be tomorrow morning. So good evening, Jordan. Good evening, Dominic. And how are you guys doing tonight?
Doing terrific.
Great.
Very, very excited about our guest this evening. We had just an incredible discussion with him last time we had him on board. And I cannot wait to get back into that kind of conversation with a legend in our business.
Right. And I have to say, it's been a great first half of the year doing our podcast together. And this basically is almost a half a year. But, you know, one of the guests that everyone asked back again was Jim Rogers. And Jim was grateful enough with his time. So it should be another great hour.
It should be, Jordan. And believe it or not, this is actually our 27th episode. So we have crossed the mid-year point. And Jim, thanks to you, is one of our first guests. And we had him on in the wintertime. And here we are. The year is halfway through, hard to believe. And the first half of the year was quietly very, very exciting, where the S&P was up over 17%.
It has been absolutely surprising, might be an understatement right now, Mike. We certainly expected that we would have a reopening of the economy, that the markets would do well, and as companies and businesses started to work again, we would have a pretty terrific year. But basically, and Jordan, I'd love for you to jump in on this one. I think we have 1 year's performance in the first 6 months. So looking forward, we're going to try to be a little cautious and careful where we step. But it's been one heck of a first 6 months of the year.
Right. And Dom, you said it right on the nose there. If you would be seeing these numbers at the end of the year, we'd all be happy. I don't think any of us expected, after the kind of wild year we saw last year and the strong finish. But I think what's really interesting about having Jim on right now is I don't think he ever looked over the hood of the car. I think he always looked longer term. And while a lot of strategists are asking, you know, what does next quarter look like? I'm really looking forward to him looking a little further out and seeing what the challenges and opportunities may be.
So Jordan, you've known Jim a long time. And is that what drew you to Jim, to be kind of a fan? Was his long-term view of the market and a bit of a visionary?
Well, you know, Mike, you know, his success is what really drew me to him. When someone can have that much success just in the markets, not because they were necessarily a future teller, but maybe the insights, the way he looked at markets. And again, I think I've written or read everything he's written. He's a terrific writer, great experiences. And if you have the opportunity to read his books or to talk to Jim live, I mean, my God, that's what every investor of this era looks for.
So I was looking to give him this plug, and maybe I will when we have him live. But Jordan, you mentioned one of his books on the last interview we did with him, The Investment Biker, I think was the name of it. So yeah. I took the opportunity to get the book and read it. And what is just absolutely mind-boggling, this book was written, like 20 some odd years ago,
right,
Jordan? And he talks about, as he literally rides his motorcycle through Europe, Eastern Europe, China. He talks about the economic environment in each one of these countries and each one of these regions. and he makes commentary about what his thoughts are of the prospects of that country's and that region's future. It is absolutely mind-boggling how spot on the man was. It literally was a crystal ball that was, I would argue, was 90% correct. I mean, it's just incredible, his insight into the economic prospects of each one of these regions. And gosh, I think he'll help us going forward with some of his insights today.
Well, it's quite a testament when an investment or economics book is still timely 20 years later. So on that note, we will be right back with a legendary investor, Jim Rogers.
And welcome back to the Lebenthal Report. I'm Jordan Kimmel, Chief Equity Strategist and Portfolio Manager. And we are once again fortunate enough to have a full hour with Jim Rogers. I don't use the word legendary often. The legendary investor, Jim Rogers. Thanks so much for joining us again.
I am delighted to be here, Jordan, but listen, I'm just a simple person. I'm not, stop all that other stuff, okay?
Well, we got it. So listen, a half a year ago, you joined us, shared some insights. It's a half year later, you're the most requested guy on. I know you're humble like that, but I want to just jump right in because it's been such an incredible half a year so far. So much to go through. And in the introduction, you know, Michael and Dominic, we were talking about how some of what you said for the first half of the year came through so far, maybe some didn't yet. And my question to you is, when you would really play out your investments, how long would you expect some of the results to start happening? We're in this world of instant gratification where people think things happen overnight. I considered you a value investor with a catalyst, but I would like you to share how long you would expect things to work out after you place your initial investments.
Well, Jordan, I have learned that I am the worst market timer in the world. There is nobody worse at market timing than me. I know after years of experience that when I take a position, it's going to go against me. And so I have learned, okay, well, I'll wait. And I do wait. And it still goes against me when I take a position. I don't know. I still haven't figured out how. I told you I wait. It still doesn't work. But I have learned to expect and to know that things will probably go against me for a while. Since my first days in the business, I just assumed everybody knew what I knew if I took a position. But then I realized, oh, they don't know. Or if they know, they don't care or they don't think about it. So I don't have a good answer to that. Maybe I should ask Lebenthal how to solve the problem, because I know things are going to go against me for a while. And if they don't go against me for a while, I worry. I say, oh my gosh, what have I done wrong?
Well, you never ran with the crowd. And I think sometimes running ahead of the crowd, you have to be a little bit patient. And that's really what I was trying to bring out. I think a lot of portfolio managers and investment advisors right now are perplexed by this why didn't it happen yet type of mentality with the impatient investor.
Well, I guess I have enough experience to know it's not going to happen now, for me anyway. Maybe what they need is more experience of being wrong for a while. I occasionally do get it right, Jordan. It's not always, but as I say, I'm always a little surprised when I get the timing right.
Jim, I think you're being very, very humble and gracious in the same breath. You have a lot of experience. You've seen a lot of business cycles. My God, could you have imagined even 6 months ago we'd be here today? I think we were all being and hoping to be optimistic, but these markets have really rallied pretty aggressively, and the economies around the world seem to be in recovery mode. I'd love your insight backwards. How did it work out so far? And what do you think going forward?
Well, Dominic, I own things. I have not sold short anywhere yet. I see that this is turning into froth. I can see that bubbles are beginning to form in some assets, but I don't see enough to sell short yet. But again, I'll probably get my timing wrong when I do begin to sell or sell short. You see the classic signs of bubbles. Bonds are certainly in a bubble. I mean, you guys are Lebenthal, bonds have never been this high in the history of the world, all over the world. So that's clearly a bubble. If you go to property, oh my gosh, in Korea or New Zealand or many places in the world, property is certainly in a bubble. You look at the stock market, you can see that things like Amazon and Tencent and Samsung, they never go down. They go up every day. I mean, bubbles are forming, but there are many shares in many markets around the world that haven't participated yet, which is why I haven't started selling short yet. The only thing that I know that's cheap still are commodities. I mean, I think I probably said that then too. Silver is down 50% from its all-time high. Sugar's down 70% from its all-time high. The only things that I know that aren't an all-out bubble are commodities. I've been buying more commodities in the past few days, weeks, but I am like everybody else. I see, oh my gosh, look what's happening. You see all the classic signs, new people coming into the market, and they're all telling their friends, oh my gosh, this is so much fun and so easy. It's so easy to make money. Oh my gosh, you see SPACs coming back. SPACs often come back at the end of a bull market. I mean, all the signs are there, but I'm not selling it short yet.
Jim, this is Michael. Good morning. Thank you for coming back. We really appreciate it.
Thank you, Michael.
When we had you on in January, you were pretty optimistic about the new administration coming in from the point of view you were hopeful we were going to have a more normalized relationship with our international partners. There's some tension now with China. Things seem to be calming down in Europe. You have a view on how you feel the Biden administration has done in the first 6 months as it relates to our international friends?
Well, you just said most of it. At least we're not smashing the Europeans in the face at the moment. I mean, maybe we should, maybe we shouldn't, but the facts are we're not, which makes them less unhappy. The Chinese situation doesn't seem to have gotten better. It certainly doesn't seem to have gotten worse, which is a good sign. Some of the other Asians likewise. I mean, we're not smashing the Japanese and the Koreans anymore, at the moment anyway. Mexico, Canada, at least Biden doesn't smash them when he talks about them yet. So things do seem to have calmed down, but the world needs a more actually aggressive making up, hand-holding, acting together, working together than we're having, because you look back I look back in history and I say, my gosh, where is this going to go? Because when politicians keep hitting each other, then they hit back and they hit back. And sometimes this has led to shooting wars. As recently as 1910, the English and the German royal families intermarried, vacationed together. They were great pals and friends. 4 years later, they were in the trenches slaughtering each other. And nobody knew why. In fact, about 1915, everybody said, wait, how'd this happen? How did we get out of this? But they couldn't get out of it. And so it was a total disaster. And that's what I worry. I see all this animosity building up for no reason that I can see. And where is it going to end?
Jim, I want to ask this question because, you touched on a couple themes, I think, that come together. And I think that the buoyancy of the markets and all of the markets, bond stocks, comes from this global liquidity and this incredible kind of don't fight the Fed, don't fight the global Fed, is what I'm hearing and feeling. But sometimes the liquidity is going to dry up. And so I'm curious, from the guy who looks around corners, is there anything that you would look out for and that this great liquidity driven market suddenly what tells or what signs would we see that maybe this liquidity is going to dry up pretty soon?
Very insightful, Jordan. Usually, historically, things start with someplace where we're not watching. You know, in 2007, Iceland went bankrupt. Almost nobody knew or cared or even knew Iceland could go bankrupt. But then,
Right.
you know, 15 months later, Lehman Brothers went bankrupt. And then people knew, oh, there's a problem here. There's something going wrong. I am looking for exactly the same thing you said. I'm watching the liquidity. The Chinese, who have done a less bad job than many other countries, have recently started raising rates and raising the reserve requirements. Not a lot, but a little bit. But it's the second largest economy in the world. And so if they're starting, somebody is noticing the problems that are developing. So I'm trying to watch where and how the liquidity might start drying up. Interest rates in the US did go up for a while. They're back down now, at least down a bit, but that may be another early sign that things are starting to change. You see the central bankers in the US talking about now, eventually slowing down, not now, but eventually. Well, at least somebody's noticing, at least something is beginning to, signs are starting. But I don't see enough yet to make me sell. Now, but I want to remind you, Jordan, I'm a horrible market timer. Don't rely on me. You look at Lebenthal, don't look at me. But the early signs are starting, perhaps. But what I expect to happen is that, let's say it progresses and markets start going down a week from now, a month from now, a quarter from now, whenever, next year. The central banks, most central banks are going to panic and then say, oh, we have to do something. And they're going to pump it up again or try to save everything. And it will probably at least work for a while. But there's going to come a time, Jordan, when the markets are going to say, we don't care. We've seen your tricks. We know. Right. We've been to this movie. We know how it ends. And when that happens, Jordan, oh, then it's over. Then we're going to have a horrible bear market.
Well, Jim, one of the things we believe in is not what you make necessarily in the bull market, what you keep through cycles. And as you said, Lebenthal's pretty conservative. And so I think one of the big banks, Wells Fargo, I think cut or eliminated everybody's line of credit this week. I just noticed that. It was kind of an interesting.
Wells Fargo, the headline on Friday.
They were just taking everyone's line of credit and eliminating it out of no,
Yeah, they shut them down.
Okay, these are small steps. I mentioned the Chinese and other people. Who knows? A couple of Indian banks are having the problems right now. All of these things build up eventually. But you're exactly right. You're watching the right things. And when they ring the bell, Dom, when they ring the bell, please send me an email. Okay?
Yeah, I'm gonna be looking in your direction, Jim.
We'll Jim. Okay. Here we go. We're coming right back on.
Ring the bell very loudly.
Here we go. Here we go, guys.
But Jim, coming back to one of the themes you've already talked a little bit about, we have our own central bankers here, our own Fed, talk about how they're gonna put aside their inflation expectations for a little while and allow us to overshoot on the inflation front. And then just, I think last week, the ECB, the European Central Bank, said basically the same thing. They're going to look past this 2% number. I don't know about how I feel about it, Jim. I really would love to hear your thoughts on the subject, because they're going to let it overshoot. How much and for how long is the $1 million question? And will they ever be able to get their hands around it? And what does the bond market do in response?
Well, everything you just said is part of the reason that I haven't started selling yet. These guys, they may be incompetent, they may be fools, but they've got the money. And so we have to listen to them. And if they're going to make it worse, and I emphasize worse, because the more it goes, the higher and out of control things get. The guy at the Bank of Japan every day prints as much, he says, unlimited amounts of money and buys shares and ETFs. Well, I mean, that's horrible for Japan. It's horrible for the world. It's good for all of us at the moment, but when it ends, it's not going to be fun.
Jim, you mentioned earlier, on the first segment about the bear market coming. We all know a bear market's coming eventually. My question for you is, do you feel, and this is a theme that we've been talking about for a while now on our podcast and on our personal conversations, do you feel that when the market sells off, it's quicker, it's more intense, it's faster, and rebounds quicker? It just doesn't feel like we get the drip, drip, drip sell-off that we had in 2001 and other bear markets. And I hate the expression, it feels different this time, but do you think that bear markets are changing, or do you think eventually we're going to have that really long, drawn-out sell-off that we've all been dreading?
Well, whatever it is, Michael, I know we're all going to dread it and we're going to hate it when it comes. And just to correct one thing you said, the Treasury Secretary says, no, we're not going to have any more bear markets. The American Treasury Secretary says, we have solved the problem. So if you believe her, and she's got a couple of fancy Ivy League degrees, we should all stop worrying. There's not going to be a bear market again. Now, I know that's absurd. I presume you know that's absurd.
Yeah, I think all of us as licensed representatives, we would never, ever let those words come out of our mouths to our clients that there'll never be a bear market again.
Well, I will top her by saying when it happens, as I've said before, it's going to be the worst in my lifetime. We had a horrible experience in 2008, partly because of her, but it was too much debt everywhere. Well, Michael, since 2008, the debt has skyrocketed. Oh my gosh, even China has debt now. China didn't have much debt 15, 20 years ago, but even China has a lot of debt now. So the next time we have a problem, oh my gosh, it's going to be horrible. So yes, you and I agree that there's going to be a bear market again, whether it's drip, drip, drip all the way, or we have a big drop and then a drip, drip, I don't know. It will depend on how people in Washington, Tokyo, London react. I'm sure they will react badly and incorrectly and make it worse, but I have to play it as I go.
So one follow-up question to that. Last year when the market sold off, when the world started to shut down, were you surprised how rapid the market rebounded in the middle of the shutdown, or did you see that coming?
Well, the answer, my actions were I didn't sell short. And so it's because I can see that everywhere they're printing. Everywhere they're borrowing and spending like it's never been happened in world history. So that's why I'm not selling short now. I'm not surprised because I think I know what these guys are doing. I don't approve. Who cares whether I approve or not? They have the printing presses and they are doing it. And that's why I keep expecting the rebounds to occur. And Janet Yellen and all of them think, oh, it's good. Let's just print more money and spend more money and borrow more money. Let's not let bad things happen.
So Jim, let me ask you this, and we know that too much debt and too much weight on top of a house is eventually going to crash it. But for now, I think we agree that the trend is still positive. Liquidity is there. The thing I want to ask about, again, with some perspective, is that the media is talking about inflation being a problem for the stock market itself. We know inflation's the worst for the bond market. You brought up already commodities, which may be the actual answer, but doesn't the stock market do okay with 2-3% inflation? Or are we just used to this kind of 0% nonsense and this 2-3% is the problem? Or is it really just time maybe to be thinking, you said earlier in the show, maybe you're thinking commodities instead of the stocks right now?
Well, historically, yes, the small inflation has not hurt. It's what happens is as it builds and it leads to distortions, and then interest rates build and you get more distortions and the cost of living goes higher, the cost of doing business goes higher, and that's called a bear market, especially since central banks and people have to react to protect themselves. Uh, we may be there now, Jordan, but in my view, we're not there yet. And all of these central banks, as I say, they're not very smart people. That's why they work for the government. And all they know is, let's protect my job. They don't care about your job or my job. They care about their job. And let's protect our job. And the way to do that is to flood the world with money. So until I see some reason, and I won't get it right, but until I see enough reasons to make me say, okay, now the garden hose is closing, liquidity is closing. So far, I'm not shorting. I'm not selling a lot. But I am buying more things to protect myself from inflation. And that, of course, if there's inflation, that means prices go up. And if prices goes up, that means the price of wheat goes higher. That means the price of natural gas goes higher. Things go higher.
Hey, Jim, if I can change the subject just a little bit, because again, your feet on the ground. So China seems to be taking a very strict tact with technology companies. They're its own technology companies, and it seems counterproductive. Maybe you can give us some insight of what the thinking is, what the plan is, because this is pretty serious stuff from our side, from what we can see.
Well, I see the same thing you do. I don't, China's been a great success for 40 years because Deng Xiaoping said, open up, let's open up. Deng Xiaoping said, if you open the window, you get fresh air, you get sunshine. He said, you also get flies if you open the window, but he said, I'm going to open the window anyway, because the fresh air and sunshine is worth it. Well, that's what they've been doing for 40 years, but this guy, for whatever reason, seems to be closing off more, which of course worries me, doesn't worry him, and maybe I'm wrong, but no, I see the same things you do, and I don't know if because huge concentrations of power, rivals have arisen in China, and some of these companies are huge. I also know some of the original cutbacks I agreed with. At one point in China, everybody was going into the business of direct loans. And you'd go into a room and there'd be 50 young people on computers contacting people saying, you need a loan, we'll get you a loan. And then they would contact another person, say, Joe needs a loan, give him a loan. It was unregulated, it was absurd, it was wild. I know that's why they eventually started. They should have started sooner, if you ask me. But what's happening now, I don't quite understand. I mean, the cutback on TikTok. I mean, who cares about TikTok? I mean, now listen, the Americans were cutting back on TikTok too. It's not just China. But I don't like seeing closing off because I know it leads to misunderstandings and fights. And the more open we are, I mean, you see what happened to China. You've heard of Alibaba. You've heard of Tencent. That's because Deng Xiaoping was opening China. I don't know if it's because.
And those companies all added significantly to China's growth, right? And global footprint. And
jobs and success and wealth and prosperity. Yeah, no, it's been great. Alibaba's been great. Tencent has been great. All of these guys have been great. Now, it's not as though they're the only ones. The U.S. is doing it too. Trump was coming down on, I won't name names, but the Trump was coming down on some of these guys, the American guys, and saying, oh, they're bad people because they don't agree with me. Well, that's the way politicians are. If you don't agree with them, they think there's something wrong, which is bad for the world.
Jim, sticking with the theme of Asia, if China gets more restrictive, do other Asian companies like your country, Singapore or Korea or Taiwan or Japan, do they fall in line, or do they look at China getting more restrictive as an opportunity for their countries to kind of fill the space?
Well, Yes, they obviously, everybody likes to fill a vacuum. Nature abhors a vacuum, and people rush into the competition and more opportunity. But eventually they start doing the same thing. I mean, Korea has a long history of closing off to the rest of the world. Japan has been overprotectionist in many ways for a long time. I would like to think, oh my gosh, it's going to change Japan. It's going to change Korea. Korea used to be called the Hermit Kingdom because they were so closed. I would like to think this is going to change them. Michael, history shows no, once they start closing and getting more power, they grab for more power. And the more closed and the more powerful they are, it usually leads to problems. Michael, well, maybe I didn't say before, but I will tell you, it is a good time to be an old American. It's not a good time to be a young American.
Oh, come on, now, Jim. I'm not going to buy that. I know that there's some pessimism in there, but I have to say, for our listeners, when I first met you, many years ago, and it was before Adventure Capitalist came out, and then, the investment biker, and all I can say is that people talk about what's going on around the world, Jim. Almost nobody has the breadth of travel and experience. And your books read out of a combination of a history book and a license or a lens into the future. So it's just a delight to have you. And Jim, I want to ask something I've been thinking about myself for a long time. And as fiduciaries planning for people's future, if someone were to say, I want to plan for the future, leave all my money in the money market forever, this is not a great idea. And I guess what I'm getting at is, you're in Singapore, and Singapore has a sovereign fund, and there's large sovereign funds around the world. Why doesn't the U.S. have a sovereign fund? Is it a good idea? Is it a bad idea? Why don't we have one?
Because we're broke. Singapore is not broke. Singapore, at least at one point, was one of the wealthiest countries in the world, not just per capita, but even with only a small population. Jordan, the United States is the largest debtor nation in the history of the world. Where are we going to get the money to have a large sovereign wealth fund? Even Social Security, which is supposedly a kind of sovereign wealth fund, is broke. I mean, you're at Lebenthal. If a guy comes into you with gigantic debts, you're a little bit skeptical. But if a guy comes in with a lot of money, you're not so skeptical. Singapore has a lot of money. The U.S. doesn't have a lot of money.
Wow. That's a pretty scary answer.
I don't like it. I don't like it. I'm an American like you.
So let me just challenge you on one thing, Jim. And I know I'm getting this wrong, but we owe a lot of money out. We owe a lot of bonds out. But doesn't the U.S. government own a lot of those bonds? And if we own the bonds, what's the problem?
So you mean we don't have to pay? That's wonderful. You mean all those endowments and insurance companies and savings plans and pension plans aren't going to get paid? You think that's great? That's wonderful. I'm going to go borrow some money. I'm going to open a big margin account at Lebenthal. Come on.
We're going to look at your credit, Jim. Let me pass this mic on here.
Well, at the moment, I have great credit like the United States did. But now the U.S. is the largest debtor nation in the history of the world. Jordan, I hope I can become your largest debtor account. I hope I can become your largest margin account and owe you the most money that anybody has ever owed you. And then I just won't pay.
Oh, man.
Well, we know that's not going to happen. But countries have tried that, right, Jim, in the past, and it just has not worked out very well. And, back in the 80s, we used to call them the bond vigilantes. People are going to start getting demand to not only get paid, but get paid reasonable rates of return on those bonds, and that's when the death cycle starts, right? Where we have to keep printing more money to pay back the interest and pay back the debt, and it's a scary thought of what the end result might be.
Dominic, it's happened many times in history. The main lesson of history is people don't learn the lessons of history. I wish they did. And even the ones who know history think that they're smarter than history. They can change it. In the mid-20s, the United Kingdom was the largest #1 country in the world. There was no country that could rival Great Britain in the 20s. 50 years later, totally bankrupt. IMF had to fly into London airport to bail them out. Wow. They went from richest, most powerful country in the world in 50 years to completely bankrupt. But that's happened throughout history, Dominic. I'm not just picking on the UK. They're not the first. And, you know, Jordan says it cannot happen because we all owe each other. Hooray. Hallelujah. I hope. You know what, Dominic? Jordan says this time it is different.
No, maybe what I'm doing is I'm giving the argument that the Fed is saying we could print unlimited, and I wanted to hear the other side. Frankly, it's great to have a great balance sheet. I look at companies, Jim, you know that when you look at individual companies, the ones with the best balance sheets are often the best investments. So thanks for standing up to that challenge.
Jordan, especially in bear markets, as you know, in bear markets, everybody looks at balance sheets. You know, bull markets, people don't care, don't want to know about a bear balance sheet. But in bear markets, people say, oh, wait. They check things like that, or they ask about them, if nothing else. But, you know, right now, the head of the Bank of Japan, to repeat, says, I will print unlimited amounts of money. And he does. It's astonishing what's happening. Japan has declining population, been declining since 2010, and debt skyrockets every day. I mean, Japan's facing big problems down the road. I own Japanese shares. The reason I do is because he prints unlimited amounts of money. He buys Japanese ETFs. Well, he has more money than I do. If he's going to buy ETFs, I own Japanese ETFs.
He's got more money than the shorts too.
He got more money than all of us. We got the best printing press. Well, maybe Washington does too now, but there are a lot of good printing presses out there now.
Hey, Jim, just looking back at our own markets and our own shore here in America, a lot of what we talked about on our first podcast that we did with you about vaccines and the economy reopening, all that is materialized. Inflation seems to be in check. Do you have an opinion on the latter half of 2021 and going into 2022? I heard what you said long term about not wanting to be an older American right now. But what's your shorter term view of the market for the next 6 to 12 months?
Well, as I said before, I'm not selling short. I'm still looking if I can find things to buy. I have more emphasis on commodities now than because commodities are the cheapest asset class I know. But if and when I find a good stock anywhere in the world, I buy it. I'm not looking much at the U.S. The U.S. is making all-time highs. You know, there are other places. Russia's hated. Japan is still down 35% from its all-time high of 31 years ago. Wow. That's not a typo, Michael. The Japanese market is down 31 years. One of the strongest economies in the world. So I'm looking for places where there may be better opportunities than in a market making all-time highs.
Are you still optimistic about the metals sector as it relates to batteries and electronic vehicles, Jim?
Well, of course, I see what's happening in the world. I mean, whether we like it or not, it looks like electric vehicles are coming. And if so, you know, an electric car uses several times more copper than a regular car. I mean, these are simple facts. This is not some kind of hype. That use much more lead, zinc, lithium. lots of things. So there are fundamental changes taking place in the world that can mean that metals, not just metals, but a lot of things. I mean, all of these things use a lot of silver. Solar energy uses a lot of silver. Silver is not just for teapots anymore. It's for a lot of other things. So yes, I see fundamental changes taking place in the world that are good for metals.
Right. Hey, Jim, your name came up a couple of weeks ago on an internal call. And for our clients, we'll miss out on trades because we're not really sticking our necks out. We want to make a strong rate of return, but really be mindful of risk. And the question keeps coming up about you're showing the gold coins and the silver coins, but the question comes up about the Bitcoins and the Ether coins and the nonsense. And Dom quoted you as saying, hey, the biggest risk out there, watch China, watch the fact that big central governments just don't want this. And Jim, you might not be a great timer, but you hit it, I think, right on the head when you brought that risk up.
Well, sometimes I get it right, Jordan. not often. I mean,
Jim,
did I tell you?
Nailed that one. You really absolutely nailed that one. Let's give you credit. You said the day China wants to control its own currency, and the day they figure out this is some kind of threat, they'll just shut it down. And that's exactly what they did.
They certainly did. And India started to do the same thing. These are the two largest countries population-wise in the world. My point, which I made before and I'll make again, is all the money is going to be on computer eventually. The U.S. is working on that now. In my view, that when the U.S. says, okay, this is now money, it's all on your computer, I don't think the U.S. is going to say, okay, this is money. But if you want to use that other money, you can use that other money. That's not the way those people think. They never have. I mean, they don't want to lose control of their monopoly. But as long as these things are trading vehicles and no threat to anybody, and if people want to trade them, I mean, I have never bought or sold any of them, but if people can buy and sell them and make money, who cares? The governments won't care. But if they become threats to the government, the monopolies, then the governments will care. And China's doing it. India is doing it. Other countries are, England is doing it. Other countries are doing it. But Dominic, if you want to trade them and you can do it successfully, why not?
Why not? We're a registered investment advisor. We're a fiduciary, and so no, that's never going to happen here. But we do listen very carefully what you have to say, Jim. And you've brought up commodities several times, and honestly, we're looking at our own research, and literally, Americans are flush with cash. A lot of it coming from the government as stimulus. And the unemployment situation seems to get better every day, and more stimulus coming out of Washington. I know the Fed's telling us that inflation is transitory, but it is hard to believe. It really is very hard to believe, for me anyway, that this thing is not going to get a solid grip on our economy, inflation, and be a really big part of it for the foreseeable future. And that might be years. So I'm in total agreement with this commodity materials trade. I think that's the next big theme, probably the next 12, 18 months out there.
Dominic, if the price of shirts goes up, you better own some cotton because that will protect you and you can even make money. If the price of your coffee goes up, you better own some coffee in order to protect yourself. So that's my view. I make many mistakes, but that's what that's where I see more opportunities now than most other things.
Well, we know the demand is there, right? We're all coming out of COVID. The consumer's coming out of being shut down. We know they're flush with cash. They can afford to go out there and buy. And companies pretty much can raise prices as they want right now. What is literally going to put the brakes on some significant inflation down the road?
Eventually, even the central banks are going to catch on. Their wives or their husbands or somebody's going to say, oh my God, the price of gasoline has gone through the roof. The price of gasoline is still down, 50% from its all-time high. I mean, this stuff is still cheap on a historic basis, but eventually even the Treasury Secretary will know that something is wrong. Because, I mean, I see on the internet often now people sending me things saying, do you know how much I paid for gasoline today compared to a year ago? I mean, people are beginning to notice. I'm not just the only nut that notices prices. And eventually, Dominic, prices will go higher and the government will have to do something. And of course, the cure for high prices is high prices. Eventually, the prices get high enough that we all go and become cotton farmers because we know we can make a lot of money. But at the moment, those days are not here yet.
But Jim, wouldn't you look at the price of gasoline as a one-off simply because a year ago the world was shut down and no one literally was driving a year ago? So isn't that one easily explainable?
Michael, yes, but I don't just look at a year ago. First of all, but if you look back over history, then you see, forget a year ago. Yeah, that comparison is a good comparison, but it's not the best comparison. The best comparison, you look at copper. Copper is making all-time highs, all time, not from a year ago, all time, because there's these dramatic fundamental changes taking place. You're very insightful. Don't look at just the last year, because the last year was distorted for a lot of reasons. But if you look at history, then you can see that, hey, wait a minute. Silver is down 50% from its all-time high. Not over the last year. All of this stuff is down a lot on a historic basis. Amazon is at an all-time high. Sugar's down 70% from its all-time high.
You know, Jim, before today, you know, I was looking over a couple of your old books, which are in the background. And one of the chapters was, you know, paraphrasing it, that the laws of supply and demand still aren't broken. And you're talking about the commodity side. And, you know, we could look at next quarter. We could look at last quarter. We know the laws of supply and demand are deep in effect. And so, you know, don't short a new high. If you're talking about copper making an all-time high, I do know you say you're not a great trader. History says you've been on the right side of the market. It's encouraging to hear you're not a seller yet, but I want to we have to wrap it up soon. You're the original adventure capitalist, the guy who probably set the tone for world trade, world investing. And Jim, your insights right now, while you're hinting of tops and you're hinting of things to be aware of, it's nice to hear you're still buying shares and still looking for things to buy.
Well, yes, because I know these guys are running the printing presses. It's not just Washington. I told you about Tokyo, England, all these places. Except the Chinese have started cutting back, and that's significant, will be, and important. But I don't see many people. Most of them are still running. Certainly, just in the third largest economy in the world, Japan, they're running the printing press as fast as they can. Washington is running the printing press. So, Jordan,
ECB, Jim, the entire European continent, the ECB is running the.
That you're making my point. Until I see, and I won't get it right perfectly, but I hope I get it close enough. When I see changes, then Jordan, Dom, I'll have to do something, but I don't see those changes yet. I still would buy in China, even though they've started cutting back. You know, when I was on the Wall Street, there was an old guy, an old technician, I forget his name now. And he pointed out to me many times that it's only the third time that they raise interest rates that you have to worry. He said, the first one you worry, but it rallies. Second one you worry, but it rallies. But the third time that the central banks raise interest rates, that's when you better get out.
Three steps in a stumble, right? 3 steps in a stumble.
Yes. You remember him? What was his name?
I'm not
Elliot?
sure who said it first, but I know 3 steps in Istanbul, and I'm not going to credit who said it first, but we're all worried about that first interest rate hike, Jim. But you know, I love your insight. I love the history. Guys, we only have a few more minutes with Jim left. Mike, Dom, anything you want to wrap up with? Any last questions?
Mike?
Jim, I guess from my perspective, last time we had you on the show, you told a great story when you were in college. You dialed home and you told the operator the number was 7.
Five.
5. I
He didn't forget
apologize.
his
Number
number.
5.
He didn't forget his number.
And here you are now. We're talking to you in Singapore. It's 10 o'clock at night here. It's 10 o'clock in the morning for you. We talked about EV and that change that's coming. Do you see any other technological changes, Jim, that you feel are going to change the way we live and work?
Well, we're doing this this interview over the internet. I mean, this would have been absurd 50 years ago. All of this is changing. Education is going to be more and more over the internet. My kids go to school on the internet these days. Lots of things are changing. You and I, my kids will never go to a post office. That's going to have big changes in the world. Lots of people have home delivery of lots of things now. There are new industries developing as we speak. You don't have to go to the doctor so much anymore. You can go call the doctor most doctors still, yes, but some already. You can say, doctor, what's this spot here? You know, so medical care is changing dramatically. No, but Michael, one of the great things about being alive is the world is always changing.
Mhm.
And it's always very interesting. I point out to people often, no matter what you think, any year in history, 15 years later, the world is going to be entirely different.
Wow.
Everything that people knew was correct in 1900 was totally false 15 years later. 1930, everything that people knew was totally wrong 15 years later. And that is true now. Everything we know now in 2021 is going to be completely incorrect in 2036.
Wow.
So look out the window. Things are changing. You have to say, wait a minute. That's going to be important. And find the investments and then send me an email. And I'll do my research too.
Thank you. I will.
Or Dom can get on his motorcycle and go around the world and
Mhm.
send us all emails.
Yeah, again, I love to travel, but I also promised how much I can travel on that motorcycle. It has to be limited. So,
Well, just one quick point about the first time I went around the world, the only way I could let my family know I was alive was to send postcards. You know how much the world has changed since. Now you can email everybody all over the world. Video email.
Send them a text. Don't even have to email.
Yeah, exactly. Or you can video. You can look at each other. You can talk to each other. I can talk to them.
brought up several times, it's good to be an old American, but I also think, we are living in incredible times, and watching these changes is pretty amazing stuff. Things that I only could dream about 50 years ago. So I think it's also a glorious time, and the ability to take advantage of these things that we're doing right now is just incredible to me. So it's always about finding the opportunities. You seem brilliant at doing that. So maybe you'll send me the email next time, but very grateful for your time this evening.
Okay, I'm going to tell you, Dominic, there's a ETF called RJA on the New York Stock Exchange, which is a basket of agricultural commodities.
I'm writing it down.
I have no idea if I'm right or not, but I bought more recently, and I'm sure that none of you know how to drive a tractor. And that's because nobody you went to school with became a farmer. There's a gigantic shortage of farmers. The average age of farmers in Japan is 66.
Wow.
The highest rate of suicide in the UK is agriculture. I'll go on and on. So I promise you, we all should go back to Texas A&M or somewhere and study agriculture. The problem is we're all too smart for that. Those guys are going to own the world 15 years from now.
Hey, Jim, we're not too smart for that. And you know what? What a great way to end the segment about keeping an open mind. And you know what, Jim? When this ultimate top comes in, I know they say they don't ring the bell. You're going to ring the bell, and hopefully you're going to ring us too. In the meantime, we're staying the course. It is really a bull market. We're just looking for all the liquidity signs. But Jim, it's a real delight. Thanks so much for your time again, joining us in the Lebenthal Report, live from Singapore. Absolute honor, privilege. Thanks so much for your time again.
Thank you.
Thank
Jim.
you, guys. I
Thank
know
you,
it's
Jim.
late. Thank you. I know it's late there. Go to the disco, and I'll see you next time. Okay.
Stay safe.
See you.
All right, I'm Michael Hartzman, and we're back. So, Dom, it's Monday night. It's about 10 p.m., and it's a home run derby. So I think it's appropriate that we just spoke to a living legend, a Babe Ruth of what we do for a living, and on the night of the home run derby, and a night where a Japanese ball player is supposed to win this American contest, I think all the stars really aligned for us to do this evening.
Look, Mike, I know this may not mean very much to a lot of other people, but growing up and dreaming about doing this someday for a living, Jim Rogers was literally Babe Ruth, right? He was literally the legend, still is a legend. And the ability to have a conversation with somebody like this is, for me, is an honor. It really is a highlight, career highlight. So he's brilliant. He's very humble and sometimes a little self-deprecating, but he is a brilliant man who's called it right more often than I'll ever dream of doing it. So it was quite an honor to be able to do that conversation with him tonight.
It was a lot of fun, and just some takeaways. He continues to be very bullish about commodities between the electronic vehicle boom and all the metals are involved in making an EV vehicle, and agriculture, which is pretty interesting. He so calmly tied in the threat of inflation to where the opportunities were. To me, that's just a lesson to be learned as an investment professional, the way he was able to look at a problem and look at the opportunities that will sprout from that problem.
And Mike, I think you brought it up 6 months ago. He told us exactly what was going to happen with Bitcoin in China. And my God, he was 100% correct. I'm going to find it hard to believe that 6 months from now, we're going to look back and his call on inflation and commodities is going to be wrong. I don't see it. I think he's going to be, again, 100% correct. And that's the kind of insight that we massage into our portfolios and our asset allocation. So we've actually already started it, but I think it's a theme going forward for the foreseeable future.
I agree. And the other takeaway was he said it over and over again. In spite of how cautious he is, he kept telling us, I'm not selling. I'm not selling short. I'm not selling my positions. Yes, I'm worried about the long-term future, but the short-term future, he's still pretty bullish and still holding his positions, holding his ground.
Well, look, Mike, we've heard it many times. Don't fight the Fed. The trend is your friend. We have all these corny one-liners, right? But the reality is not only our Federal Reserve, but all the central bankers around the world are committed to flooding the economies with as much cash as necessary to keep things afloat and keep things moving forward. That's a trend you can't fight right now. We don't have enough capital. He doesn't have enough capital to fight that. So for a while, we're going to go along for the ride.
Yeah, we have no choice, but look, we never have any choice but to go along for the ride, right? Because our job is not to put people in cash and say, we'll ride it out. We'll see you in 2 years, right? Our job is to ride those waves and just make the proper calls along the way.
But obviously, as part of that responsibility, keep a very close eye on these situations. And again, we're joking about ringing the bell and sending the email, but there are warning signs, and eventually the warning signs just become overwhelming, and we have to step out of the way. So we'll be talking to the smartest people in the room, like Jim, continuously, taking the advice, and then hopefully we make good decisions as we go.
Well, we definitely were fortunate, and very fortunate tonight to truly speak to one of the smartest people in the room. So on that note, I will wish you a good evening, and I will see you down the road.
Thanks for tuning in to the Lebenthal Report. Dominic, Michael, and Jordan will be back for our next program, airing next Tuesday at 2 p.m. Pacific Time and 5 p.m. Eastern Time on the Voice America Business Channel. Until then, have a great week.